And speaking of loud and noisy, now I'm not talking about Peter Schiff here. I'm talking about the reaction to very often here among our panelists to what Peter Schiff says. He, of course, is the author of Crash Proof. Peter, you got a lot on your plate, oil and the dollar. Go ahead.
Well, you know, let me put the two into perspective, because it's really not oil prices that are rising. It's the value of the dollar that's falling. You know, back in 1970, oil was about $3 a barrel, and gold was $35 an ounce. Today, with oil at about $97 a barrel, gold's around $830 an ounce, the relationship is still pretty much intact.
So they track.
Yeah, and so what's really happening is our money is losing value, and certainly, you know, when oil was $20 a barrel 5 or 6 years ago, my long-term forecast, my 10-year forecast, was $150 to $200 a barrel. That's in print. I've made it several times, and I still think that that's pretty accurate. I think we're going to go there, not because oil is getting more expensive, but because the U.S. dollar, which is hitting another all-time record low against every currency today, continues to sink through the floor.
Peter, let me just mention two things. First of all, oil, as it pertains to the average household, is a lot less of an impact than it once was. And
no,
also,
it's not.
Also, well, hold on. Also, you know, you talk about the dollar, but how much are they paying for crude oil gasoline in Europe? If the euro is such a great currency and the dollar's not, aren't they paying at least twice as much as Americans?
Yeah, but Charles,
there's a lot of
they are, but Charles, but it's still a bargain for them, because compared to what we're paying,
no, it's not a bargain.
Let him finish.
Phil, Flynn,
compared to what they've been paying for the last few months. I mean, listen, for Europe with because oil's priced in dollars, for them oil's half price, even though it's more in dollar value. For them, it still seems cheap, because they're used to paying outrageous prices.
Let me say two quick things.
For them, it's a good thing.
Yeah,
I hate to say it, but Peter actually is onto something here. It isn't just oil, it is the dollar. And the reason we're paying such a high price for oil is because the dollar has fallen so much. So in this regard, I know it's unbelievable, but Peter and I actually agree on something.
Well, two quick points I want to make. Just first of all, you don't have to go to Europe. It's 5 years ago, the average American earned 70% more than the average Canadian. Today, the average Canadian earns as much as the average American. By next year, the average Canadian will earn 20% more than we do.
I'll look that up. I don't believe those numbers, though. Right offhand, Peter.
Go check. And also, let me tell you.
Let me just
I got a very
finalize the point. Hold on a second, Peter. You made, because of the fact that the Canadian dollar is now trading above the U.S. dollar, that puts their salaries in a very different perspective.
Of course. Well, that's how it works. That's why we're wealthier. That's why we were wealthier than so many people, was because our money was more valuable. As our money loses value, but oil is just as important to our economy today, if not more so than it was in the 1970s.
Let me
hold on, Peter.
All right.
Let me stop the Peter Schiff show for 1 second. Hold on, I'm here.
You know, he didn't interrupt Pat when Pat was agreeing with him.
No, he didn't.
Let me just say one thing, and Charles made a statement I'm not sure I agree with, that it doesn't really matter that much that oil prices are where they are. I believe Americans are used to a certain price in oil. We used to pay $1.50, now it's $3 and going higher. I do think it matters, and when you put the combination of what's happened with housing prices coming down, there is something out there called a wealth effect, and that wealth effect is going south right now, not north, and that will impact the consumer both psychologically and physically going forward if this continues.
Gary, I understand what you're saying, and we've been hearing this for a very, very long time. And, you know, maybe it will happen, but I think that $3 threshold, we got that sticker shock already. And you know what? I think a lot of people are sort of used to it right now. Maybe the next tipping point could be $4, but I don't think it's $3.
You know, it takes
it's happening right now.
It takes a long time to change something, though. It takes a long time for us to change our usage of gasoline. It takes a long time for us to change our usage of oil.
People are still buying SUVs.
Yeah, well, not as much as they were. If you look, people are going out and they're test driving a Prius. Maybe everybody's not buying it, but they're starting there.
Pat gets the last word. Thanks, gang. Well, should the government play an even bigger role in inspecting the products that come into our country?
Will they help or hamper free trade? Our Fox panel back now to discuss. Peter Schiff, I'll let you start with this one. The free trade issue is very crucial, but you've got a lot of parents in the States who say, give me toys that don't have lead paint on them. Can we have both?
Well, sure. You know, I don't believe that that's the government's responsibility more than it is the free market. But, you know, talk about biting the hand that feeds you here. I think the politicians are going to make some noise because it's good politics, but they're not going to do anything. Unfortunately, the free market is. As the dollar collapses, Americans are simply going to be too poor to buy all these imported products. We're going to get priced out of the market, and all these wealthier people who are seeing their purchasing power rise every day, they're going to be snapping up these products. You know, he talked about seafood. seafood. We import 90% of our seafood. Imagine how expensive fresh fish or shellfish or lobsters are going to be in a couple of years. Americans simply are not going to be able to afford these items.
Victoria Barrett, we welcome you to our daily show. Victoria Barrett from Forbes. I saw her pretty face in there. Where is Victoria? Victoria,
I'm
you
over
there?
here.
There you are. Good to see you. What about Peter's point? I mean, it's hard for most Americans to imagine being priced out of products that you get for free at McDonald's from China. I mean, you know.
And I don't think that's really going to happen. The fact is, China needs the U.S. economy to make its products, to sell its products. They really have succeeded on the back of our consumers. And look, we clearly have a problem with product safety. I'm frankly amazed that we haven't had more issues, given that we are getting 90% of our seafood and lots of other products from abroad. The issue here really is that the FDA has a very historically American focus, right? And the world has gone global. We're getting everything from abroad, and now they need to shift their focus. But my concern here is that prices will rise because the FDA will make it impossible for companies to efficiently get products from abroad. But that's the danger here.
But Charles Payne, don't you think in many ways that if we have these offices already in place to protect the consumer, that somehow they have to get in there and figure it out?
Absolutely. I mean, this one to me is a no-brainer. The fact of the matter is that because no one really has been minding the stores, why this has been happening. You know, I agree with Peter in that, you know, the sense that actually this will help free trade because we have greater confidence in the products that we're buying that are coming in. So I think this is wonderful. I can't even understand why there would be any opposition from anybody. If there's one thing you could agree on Capitol Hill, how about making the products that we're importing safer for Americans?
Well, if there's one thing you could expect on Capitol Hill, it's everybody blaming everybody else. Ms. Nord was on saying Congress didn't allocate the money. Then the Congresswoman was on saying that she was firing too many inspectors. So everybody's
but at this point, let's get beyond the blame game and let's correct the problem.
The bottom line is that China itself doesn't want to live with all the danger. Right? They don't want to see their workers dropping dead of lead poisoning, so they're cleaning up their own act. Can we help them to do it a little more quickly? That's the question.
This has been an absolute debacle for China because the problem is not government. The problem is the consumer going now and looking at a toy and seeing, is it made in China? Because I don't know that I have confidence that that toy is safe for my child. Or picking up a bag of pet food and saying, I don't know if I have confidence if that pet food has ingredients coming from China. So I think China and the United States are aligned on this. I think the key here is finding some balance between creating a reasonable system for product safety and without making the cost so onerous that you drive the price up inordinately.
There's one important point that was brought up that we got to address. China doesn't need the American consumer because the American consumer can't pay for the product.
Peter, you're out of your mind. Are you kidding me? What are you saying?
Let me finish.
That's why China pegged their currency to the U.S. dollar because they need the U.S.
Let Peter finish his point. I'm not sure I heard him. Go ahead, Peter.
They no more need us than Wall Street needed subprime borrowers to lend all this money to. The problem is they can't pay it back. We don't have the productivity to pay back the Chinese for all the products they're sending us.
Victoria?
They have a big inflation problem in China right now because they're trying to prop up our currency, but they're going to give that up.
Okay,
I think
Peter,
over the
hold on 1 second. Go ahead, Victoria.
We are their most valued customer. Don't think for a second that they don't need us. That's an absurd notion.
We're not. We're not their most valued customer. We're not paying. You know, when the Chinese let their currency rise, I think over the next 5 to 10 years, you can see the value of the Chinese currency go up 400 to 500% against ours. And
we have a great relationship with China. But they need us and we need them right now.
Hold on, Peter. Let her finish her point. Go ahead, Victoria.
They need us and we need them right now. They are making money off of the American consumer.
No, they're not.
Walmart is one of their largest customers. Think about it. If Walmart were to go away tomorrow, the Chinese economy would take a huge hit. There's no doubt about that.
No, they wouldn't. Look, you remember in the dot-coms, remember all the vendor financing when Lucent and Norcell and Cisco were loaning all kinds of money to dot-coms to buy their equipment? When the dot-coms went broke, they had to write down all those sales. China is vendor financing the United States. That we're loading them up with bad debt. We can't pay. China is wasting their resources, and as soon as they figure that out, they're going to pull the plug on the pay.
Last word here, Charles. And when you bring this up, you talk about the free market. If those toys continue to be we can't depend on them whether they've got the lead. Isn't this the free market at work, and people start buying made in the USA toys?
Absolutely. Not only that, though, people who make toys in the U.S. can sell them overseas to all those rich rich people that Peter are talking about. So guess what? It works both ways. It's a great thing, but we need to be able to believe in the safety of the products that we're importing.
All right, thanks, gang.
Has it finally happened? Are even well-qualified buyers struggling to get mortgages because of the subprime hysteria? Our Fox panel back again to talk about it. Peter Schiff, first to you. What do you think? Has it really infected everybody now?
It's going to. First, let me just say something real quick. You know, you guys are giddy about the stock market. You know, the stock market, the Dow would have to be
giddy, but we're not sad about a plus stock market.
It would have to be up 600 points today just to be even with the price of silver. The Dow is collapsing.
And the price of gold would have to be $2,000 an ounce to be equal to the price it was back in 1980.
I'm talking about today. I'm not talking about 1980. But let me get to the topic of subprime, because, you know, I saw this problem coming from a mile away. I told everybody who would listen, I screamed it on television that this was a problem. I helped my clients short subprime mortgage before anybody on television was talking about these triple B minus tranches. We shorted them. This is not a subprime problem. This is much more pervasive. This is a mortgage problem. It's the entire mortgage market that's in trouble. And a lot of people are worried about the problems going from Wall Street to Main Street. They're already in Main Street. The reason that Wall Street is in trouble is because Main Street can't pay these loans back. Okay. And because people's houses aren't worth anywhere near what they think they were. If home prices were still as high as the government tells us, there wouldn't be a problem.
Let me jump in and ask Gary Kaltbaum if he thinks that at least we're seeing now, if the home builders are showing some 20% down for Hovnanian, does this mean that the shaking out is soon to be over, or is there much more ahead?
I think there's much more ahead. Look, the lenders have gone from one idiotic extreme to the other idiotic extreme. They were dropping money out of helicopters onto people, giving $250,000 loans to people that don't even work or have any net worth. Now they refuse to give money to people that have a ton of money, and that's what's doubly hurt in the market. By the way, Hovnanian down 20. You should see what other companies are doing. I'm seeing 40s and 50s. I don't believe we're even close to a shakeout. In my studies of bear markets and housing, it does not take 2 years, and due to the fact that we had the biggest extreme speculation ever, I think this has got a few more years to go.
I agree, and it doesn't matter, you know, about how credit quality or how good a borrower is. The houses are overpriced. Why anybody would lend anybody money to buy a house at today's market, because the housing price.
All right, guys, we're not going to allow you to step on the toes of the ladies who've been waiting by patiently to talk. Victoria, are you as gloom and doom as these guys?
Not as gloom and doom. I don't know what more gloom and doom would sound like, frankly. But here's what I think matters. What matters is the holiday season. This is the true test of the American consumer. And has the housing market spilled over? What everyone is wondering is, do people feel less wealthy because their houses are worth less? And will that show up at Walmart, at Target, at Williams-Sonoma this Christmas?
That'll have nothing to do with the housing market whatsoever. The problem with housing now,
wages are holding up.
We got the most massive inventory build in the history of time in housing, and it's continuing to get worse, combined with restrictive lending. And by the way, for me, doom and gloom, I just deal with facts and what's in front of me. If things were better, I'd be glad to tell you that.
Gary and Peter are realistic?
Right.
I mean, think about it. We've had a situation with these homes that is now pretty serious.
Right. You know, you're in a corrective phase for real estate, and the subprime lending problem exacerbates everything. I think that if you look at the price of housing in many areas of the country, they doubled in 5 and 6 years. So if there's a correction today and your house is not worth what its all-time high was, well, you might think the same of your stock portfolio at varying times. Your house is not just your investment. Your house is where you live. So you have it really serves two purposes. And Victoria has it absolutely right. Housing is linked to the Christmas season. She's absolutely correct in that regard. Many, but not all Americans, but many Americans do use their house as a piggy bank. And to the extent that they need to dip into their house for the purchase of the next car or the purchase of a college tuition bill, there's going to be some trouble here.
Well, Victoria, you know, the markets do climb these walls of worry, and it seems like it's doing so exactly that today.
Yeah, what's hard to tell is if it's really a wall of worry and that deserves to be climbed. The market has done remarkably well, even amidst high oil prices, dropping home prices.
No, it hasn't.
But what's important is that, you know, wages have stayed constant. We've got remarkably low unemployment, and we've got economic growth for now.
Peter,
the economy is holding up.
I'm looking at Hovnanian just to pull this name up. It's down about 2%, about 2.33%. And I know exactly what he's going to say, but I just want to see his reaction. Would you pick up any of these names as they appear to be getting cheaper?
They're not. Look, you know what? Most of them are going to go to zero. They're going to go bankrupt. These companies are in serious trouble. There's no reason to buy them. Home building, no one's going to build any homes in this country for at least a generation. We've got too many homes. That's one problem that we don't have. No one's going to be homeless. We've got all sorts of homes. The problem is people aren't going to be able to afford to repair them. They're not going to be able to afford to heat them. They're not going to be able to afford to fill up their refrigerators with food. These are huge, huge problems that we're having. You know, we've got a glut of houses. But, you know, the problem is we had that big run-up in home prices. Americans still don't understand that all those gains are gone. In their minds, they still think their house is worth twice what it was 5, 6 years ago. It's not. In many cases, it's worth less. If you actually tried to sell it, you would get less than you paid 5, 6 years ago. But people have all kinds of mortgage debt that they've piled onto these homes. Your home equity goes away, but your mortgage debt is still there.
Peter, we're up against a hard break. We thank the panel. Triple digits right there. You see it. The Dow Jones is up 105 points. This on a day when oil was up to a new time high of $96.67. Gold was up. The dollar was down. But look at those triple digits, and NASDAQ's doing well
Only
also.
6 Dow components are down. Of course, Citigroup once again suffering today, but way off its earlier lows. And, you know, you see the market continue to move higher on certain days where oil's high and gold is high, which would be disconcerting signals. But what about recession? Sometimes a lot of people talk about it. Greenspan mentioned it a couple of months ago and then stopped talking about it. Are we in or near a recession? I had a chance to speak with the former Treasury Secretary, Paul O'Neill. He had some thoughts on that. Listen in.
I don't think we're in a recession now. I think there's still quite a bit of underlying strength in our economy. You know, our financial markets hate uncertainty. And what's going on right now is people not being very sure about where the bottom is. I think if the major financial institutions, i.e. the banks and people who are caught up in subprimes, could draw a hard line and say this is all of it, I think the markets would be reassured and we'd go forward from there.
He says nothing's a calamity right now, David.
And a lot of smart people who've been in a position of business and economic power in the government are saying the same thing.
And that would be Paul O'Neill, who ran the Aluminum Company of America, which at a time was a Dow component. It's a Dow component. And, you know, you look at that and you say he ran both the public and the private side. And he should know. So let's find out what our panel thinks. And they are back with us again. Peter, I know you're much more worried than Paul O'Neill is right now. What do you think about what he said?
Well, he's just wrong. We're in a recession right now. You know, the government reported the GDP last week. They said our economy grew 3.9%. But to make that, the government assumed annualized inflation was running at 0.8%. Now, there's no way that's true. If the government was accurately reporting inflation, we would know we're in a recession. You guys have to start looking at real numbers. You're talking about the Dow up about 100 points today. If you price it in Canadian dollars, it's down almost 100 points. You know, we just did that segment about wages. The problem with American workers is that the value of their wages is diminishing every day. You know, Liz Gazelle.
Okay, hold on a second, Peter. Hold on a second, Peter. Are you going to challenge that remark?
Well, first of all, I'm going to value the Dow in dollars, and then I'm going to take my dollars and buy stuff in America with those dollars. And you know what? I'm going to get the same value for them. You know, the Dow's up. I really think it's unfortunate to really dissuade people from being involved in the stock market. Every time you say this, Peter, it seems like the Dow's up a meaningless 100 points. But you know, to get back to your point, you know,
Charles, my clients are making 3 and 4 times as much money as yours. I'm not swaying anybody from doing anything.
Let's go back to the fact, though. Is this a recession or not? I don't think it's a recession. Okay, and to be quite frank with you guys, I think a recession these days really is will come as the fault of the Fed. If the Fed mishandles monetary policy, that's what I'm more concerned about right now.
They've already done that.
Than a consumer-led recession.
Pat, recession or not?
I don't think it's likely. I think we're in a slowing economy. I think that's very clear. We're in the 5th year of an economic recovery. It's normal for it to slow, and I think you can get into this very pessimistic role and say it's going to end up in a recession. It could, but I think the probability is fairly remote.
By the way, specifics as to what a recession is. There is a group that decides what a recession is. The major component of a recession are 2 quarters of negative GDP growth, Gary Kaltbaum. There are some other things as well, but that's the basis of it. Are we anywhere close to that?
Look, the best opinion of whether we're in a recession or going in a recession is the stock market itself. There is no way this market has snuffed out anything that looks like a recession, and Peter can talk the numbers are wrong all he wants. The stock market has never missed a recession in history, and we're up for the year, and we're close to the old highs.
All right.
Ain't seen it yet.
Peter, 20 seconds, final thought. 20 seconds.
Look, Gazelle may not be as pretty as you are, Liz,
Giselle.
but she was a little smarter.
Thank you.
She negotiated her contract in euros. You should have done the same thing with your contract with Fox.
Oh, jeez.
She's denied that to Fox, by the way, about wanting to be paid in euros.
Well, if she was smart, she was. I mean, and pretty soon everybody's going to want to get paid.
Okay.
These numbers are meaningless. People have to understand what's happening to the value of their money. This is a disaster for Americans. The market is going down. The economy is going down. And people need to get their money out of the country.
20 seconds and 20 seconds more, Peter. Thank you very much. You did say a nice thing about Liz, though. We appreciate that.
We'll take that.
The closing bell just minutes away.
Stay tuned.